And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Let's jump right in, take a look at what we are going to be covering here today. First up, as usual, we are going to take a look at the broader markets, see where did we close the week. A very interesting week this past period here with a lot of economic data coming in to move these markets. We're going to take a look at some of those headline news that did just that, to help these markets trade a bit higher this week. Also, what other factors, or really what is driving these markets higher? And I will share with you some themes last week as it relates to those stocks that had the largest gains. And then also we're going to take a look at small and mid-cap stocks. They are joining the party, and I will share with you a view of the broader market indices for these groups, but also we'll take a look at some of the underlying stocks that are pushing these smaller caps higher. Also, turnarounds are emerging. We are seeing more and more stocks break back above that 200-day simple moving average, and that is the last barrier standing for most stocks out there. We've seen earlier turnaround views as it relates to stocks moving up above their shorter term, but that move above that 200-day is that last potential area of resistance. So we'll take a look at some of those turnarounds and themes among those areas that are emerging above resistance. So let's take a look at some of the headlines last week. First up, we did have the NASDAQ exit bear market status. And in essence, this is using a widely followed view where any index, if it particularly coming out of a bear market, if that particular index rises 20% above its low, we'll take a look at the NASDAQ, and we did, in fact, hit that last week. There have been other periods where this has occurred and it has not followed through. We'll talk about that as well. Also, last week's biggest report was the Consumer Price Index, and it did come in below estimates. This is all about inflation, very widely watched number by the Federal Reserve. We're on the lookout for inflation to potentially peak, and then of course, we want that inflation to trade lower, but that was very good news for the broader markets. And then later we did see producer prices, that PPI, another not quite as impactful, but inflation gauge, and it did fall for the first time since our recent recessionary period. And we also did get initial jobless claims on Thursday, and they did come in below estimates. And also today on Friday, consumer sentiment was up, and that is good news, certainly as it relates to consumers realizing that energy costs have in fact come down quite a bit. So of course, there's one area that has responded the most positively to these numbers, and we will get into that as we move forward. So let's take a look. Here we are with a daily price chart view of the S&P 500, and a couple of items to note this week, and that is price action from Wednesday into Friday's close did push the S&P 500 up above this area of resistance here, this June back and fill period of consolidation. Good news. So we are certainly retaining our uptrending status here. And in essence, this move up above this area of resistance confirms an uptrend in the intermediate term for the S&P. And I'm going to talk all about that in my MEM Edge report this week, as well as other dynamics. So use that link below. You can trial that report for a very nominal fee. As we progress here, I'll share with you some of the areas that have moved into favor and how that report was able to get in front of those areas as they moved higher. So let's take a look beyond the S&P 500. But before we do that, the RSI and stochastics, two momentum indicators that I use, are up here above their net neutral 50 in positive territory. So nice uptrend. Next area of possible upside resistance is going to be in this 200-day simple moving average area. So from here, I always like to take a look at the underlying sectors, the 11 sectors in the S&P 500. The relevance here is the fact that studies have shown that the stock of your choice, you want to make sure that you have that correct, not only sector, but industry group. Almost 50% of your stock price's appreciation or depreciation will be in tandem with that sector and then also that sub-industry group. So let's take a look. I have the 11 sectors here. I've added that relative strength indicator and sorted it in descending order. What emerges here is a bit of rotation. For those of you that watch this each week, you may already recognize some rotation taking place here, and that is the fact that industrials are up here at the forefront, as are financials. This is a newer move, and utilities have been up here at the forefront. This is something I've talked about repeatedly because it was the first sector to break above that 200-day. It is now hitting a new high. And if you haven't already, you could take a look at last week's show. I talk about the reason for that and how that can be sustained. Also, my MEM Edge report gets into that as well. So from here, I'm going to share with you a chart of the XLI industrial, not as sexy as the retail or tech, but we can't ignore the fact that it has broken back here up above this 200-day simple moving average, all about earnings among underlying companies. As we move forward, I'll share with you one particular area that had a nice move among industrials last week, but certainly a lot of beaten down names in that area coming out with very good numbers. So another area that we want to take a quick look at here are financials on the move. We had this gap up on Wednesday, nice continuation rally taking place. We're not quite in positive territory yet, but I will share with you a couple of turnaround names in this area, as well as one particular area that is really pushing financials up higher. So let's go ahead and move down. We want to take a look. Now, interestingly, energy is still down in this lower quartile. However, it is having a banner week. It's up 7% for the week. However, it's up from a rather depressed level, but we can see your momentum indicators trending upward. And it is interesting to note that these energy names have, a number of them have moved back into positive territory. What I'm going to share with you as we move forward is an energy ETF that is primarily small cap. So a way to capitalize on a dual movement into small caps as well as into energy. So another area that I did want to share with you that is showing up kind of in the middling area here, but it is one that is continuing to inch closer to this 200-day, and that is consumer discretionary. It was, again, up about 3.2% versus the S&P 500 up about 3%. So a little bit of nice outperformance, and I'll share with you where that is taking place as well. So let's go ahead and move forward. I'm going to share with you an even closer view as far as what is working. And here we have a number of ETFs. From my work, I do tend to focus on high growth areas that tend to move faster than the broader markets, but I have other areas in here as well that are very, very telling. Interest rates, the US dollar, volatility. So we're going to take a look at all of this because, again, the relevance is you want to understand where the current relative outperformance is taking place. I've gotten comments over the weeks stating that I'm only showing what has taken place. Why aren't I focusing more on what's going to happen? And here's the reason. It's very important to know what did drive price action last week. Where is that relative outperformance? And this is all with an eye toward that outperformance and that relevance continuing into this period going forward. And for those of you that subscribe to my MEM Edge report, you will know that within that report, I get a lot more into detail as it relates to what to anticipate going forward. But our work here with this show is to highlight where the strength is, what worked more recently, and again, to help prepare you as we move through these markets. So let's take a look at some of these underlying areas. And I talked about financials on the move last week, rotating into that relative outperformance area. Here's one of the reasons. This is the regional banking ETF KRE. And you can see today it's dipping just up above that 200-day simple moving average. I do have, again, a couple of turnaround banks I'll share with you. It's rather mixed this time as it relates to the banks moving forward. A number of them are super small cap. If we have time, I'll share with you how you can quickly assess that using StockCharts.com as it relates to those names that are pushing this regional banking ETF higher. So let's go ahead and progress a little bit further here. And I want to share with you another area. I did talk about this last week. This is XRT, the S&P 500 retail ETF. And this ETF was up 7% for the week. So I mentioned to you CPI, PPI, those numbers that are suggesting that inflation has peaked. This is very good news for these retailers as consumers will potentially open their pocketbooks more with the lowered inflationary rate. But we're also going into earnings season with retailers. We have a number of mega cap names due to report and smaller names as well. And they are rallying going into the release of their numbers. This is all about an earnings season that has been very forgiving and is rewarding companies even if they come in below estimates. If they guide higher, other factors are pushing these stocks higher. So from here, we can take a look at technology, and tech was kind of middling here. And I'll share with you, let me start with that. I'll share with you one of the reasons that the tech sector is not a top performer. Here we are with SOXX, that's the semiconductor ETF. And we can see, take a look at this significant pullback that took place on Tuesday. This was because NVIDIA warned about their growth prospects going forward. And that was on the heels of MU and Intel, a couple of other semis that are talking about growth potentially hitting some headwinds into the second half of the year. So we did see the entire semiconductor group pull back very sharply. I believe it was down 6%. So a nice reverse out of that pullback, and semiconductors did end the week up, but not by much. So that did hurt that technology sector, but we did have outperformance. And here we are with software names continuing to trend higher here. And this group was up in line with the markets. Again, all about earnings as far as those big outperformers. So let's go ahead and move on. I want to share with you this volatility index and take a look. We are down here now at that 19.5. I've suggested oftentimes in the past, anywhere around that 18 level is very constructive for stocks. And really also what I pointed out in my newsletter back here is a break below this 200-day simple moving average on this volatility index is very impactful. It's quite positive for the markets. This break back here into April also coincided with a rally in the markets. So volatility looking quite good in the sense that lower volatility means more investor confidence, which in turn should push the markets higher. From here, I do want to share with you, actually, I did mention that I would talk about the NASDAQ here. So let's just take a quick look. Here we are with our mid to late June lows in the NASDAQ. And this week on Wednesday, we did hit that 20% above this low range. And in turn, that bear market label has been removed. But overall, we are seeing a nice continuation uptrend here in the NASDAQ with this 200-day simple moving average being that next area of potential upside resistance. So from here, I did want to share with you a chart of the percent of stocks in that NASDAQ that are now above their 200-day simple moving average. Last week's rally was very broad-based, and with that, we are seeing a continuation rally in a number of these stocks. So this is a weekly chart of those NASDAQ stocks that are above this 200-day simple moving average. You can see it's been trending upward, and we're getting into very nice territory. Certainly, if we go back to the position of that, I'm just going to annotate this very quickly, coming out of that 2020 bear market, and we can take a look at where we are relatively now. This is that peak back here in May of 2020, and we are very quickly approaching that area. So nice broadening out in, you'll see this with the S&P 500 as well. And this is what you want to see to support a nice potential continuation rally from here. So a couple of areas that I want to share with you. And I talked about themes that are really pushing a number of stocks higher. So I'm going to share that theme with you utilizing a couple of FANG stocks. Here we are with Netflix. It was the top performer of those mega cap stocks last week, 9.4% gain. And you can see that nice uptrend taking place. The company did come out and announce a new plan. They will be raising subscribership cost fees, and all of that has investors excited about the future growth prospects for Netflix. So essentially a bit of restructuring behind the scenes. We can take a look at the second best performer among those mega cap names, and that is Meta platform, formerly Facebook, up 7.8%. Take a look. This is another area that is investors, some of them believe that they will feel growth pains with their restructuring, but the company is really transforming their focus, and investors like this kind of concept where these management are coming in and stating that they are going to restructure how they do business, and whether it's cutting the number of employees, somehow cutting costs, and those types of statements are being rewarded. Now, of course, the other, and I will share a couple of names as we move forward, the other big driver here is earnings, and that continues to be, if you look at a list of those stocks that were the best performing, oftentimes they will be those companies that came out with strong numbers. So let's take a look at a couple of those names. And I'll also, in the throes of that, share with you areas that are experiencing superior strength. Here we are with ARRY Technologies, ARRY. So a couple of characteristics that are very common among stocks that have had big moves this week. This particular company is smaller. We're going to go ahead and pull up this full quote, and you'll be able to see how you can access this type of information. The stock is a 3.5 billion. So it's right in that mid-cap sweet spot there. And then also take a look at the group. It's part of this renewable energy equipment. For those of you that follow my work, you will know that that was an area that I picked up on actually about a month ago. And so we've had this nice rally continuing. So here we are with ARRY, and we did have that nice gap up on earnings, 675%. Actually, that's the estimate for earnings for 2022 for the remainder of this year. But we did see the company report quarterly results that were 350% above estimates, 350% above as it relates to year-over-year growth. So we had that nice gap up. Now, this gap up into a base breakout takes us back to the passage of Biden's inflation bill moving forward, and we can see this gap up into a base breakout on big volume. And that is one of your most powerful formations as it relates to a base and a continuation rally. Take a look at this base breakout, big volume, and your momentum indicators turn positive. So if you are out there looking at stocks, there is a screen preset, gaps up, take a look. Did it break out of a base? Is it on volume? Have your momentum indicator shift it into upward territory, and that will oftentimes be a good signal that there is further upside ahead. Let's take a look at some of these other, these are going to be smaller stocks that have had nice moves last week. all about earnings. This is Golar LNG, and it is an oil and gas equipment stock. So I'm just going to mark this up and highlight for you those characteristics that make the stock really quite compelling here. Well, my drawing skills are failing me, but you can, I'm sure, visualize what I am seeing as it relates to that base breakout. You want to see volume. These base breakouts can be very powerful, nice high volume characteristics. We're still early in this momentum move with the MACD trending upward. RSI also on the upside move here. From my work, I would drill down into an intraday chart to get more color and look for a pullback as a buying opportunity. One last name that we can look at also in that alternative energy space. This is PLUG, and I'm highlighting it because the stock did break above that 200-day simple moving average on Wednesday, and we can see the nice high volume on that break. The company did come out with numbers, but they were rather weak. Interestingly, today's 6.5% rally in the stock is all about Wells Fargo raising their estimates for the company, even though they did have weak numbers. A lot of the weakness in those numbers has to do with PLUG putting capital to work so that they can really expand their growth. I'm going to share with you a monthly chart of PLUG, and I'm pointing this out because I do recall owning this stock back here. It was a 400% winner for me, and so when I see these kinds of names get started here on the monthly, you have nice positive characteristics. They are going to pique my interest because I know that the upside potential for that name is certainly there. Let's take a look. I talked about names that are due to report their earnings, and I'm going to share with you just a couple of them. Certainly thematically, it's going to be all about retail next week. So let's take a look. That's not what I meant to put up here, but here we are. We're looking at Home Depot, and we can see it's been in a nice relative uptrend. Lowe's is due to report next week, and this is what I talked about, that rally going into earnings in anticipation of numbers that, even if they are remotely positive, the stocks are being bid up higher. Here's Deere, DE, break up here above that 200-day. It's had a significant rally already off the bottom, but it is a market-moving stock in the sense that investors will be looking at those numbers. Another semiconductor name due to report next week, Applied Materials, AMAT, so I know I'll be keeping a close eye on that. I only have about 7 stocks on my suggested holdings list, but certainly they are outperforming. One of them in the top 20% of the best NASDAQ 100 performers, 2 of them on the top 10 performers on the S&P today. So very select list, but also showing nice outperformance as it relates to getting into those correct industry groups. So from here, let's take a look at some of those turnarounds that I mentioned to you. And most of these are, again, going to be smaller cap stocks. And actually, I did not share this with you earlier, but here's a look at the Russell 2000 Small Cap Index, IWM, and it is up most this week. And we can see this break up above this 200-day simple moving average. So good news that small caps are participating. They are generally a bit riskier. It's just another metric telling us that consumers have confidence in this market. So here's Jack in the Box, and we can see it's had, this particular name had already had a significant rally off the bottom before responding constructively to their earnings here. So I'm citing this to make sure that you don't get put off by the fact that this, in this case, Jack in the Box already had a nice move, but there's still upside in the number of these names. They've just been so beaten down. Let's take a look in an entirely different area at a small cap name. This is Warrior Met Coal, HCC, gap up, and not as compelling looking, but it is that turnaround concept. They came out with huge numbers. The stock's trading at 2 times their PE, and that might pique some people's interest. And then also turning around to, other turnarounds that we can take a look at here. And this is a company that also came out with rather mediocre earnings. This is Boot Barn in that consumer discretionary area. And it had this gap up last week. This is what took place in a number of these consumer names after those inflation reports pointed to the possibility that we could be entering a period where interest rates or inflation is declining. So I wanted to share with you actually one last stock and that I talked about, because I mentioned these bank stocks are beginning to potentially turn. Here's SVB Financial. This break above resistance here, very big volume. I'm pointing this name out because historically it can and it has been a big winner. Certainly with my MEM Edge report, we got into the name back here at the end of 2020 and took the stock quite a bit higher, nice triple-digit winner. So I will leave it at that. Again, if you have not already used that link below, trial my MEM twice weekly report. And everyone, have a great weekend. I'll look for you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.